Hi everyone, welcome to Forex Trading Empire YouTube channel. In this video, I'll be talking on how to trade the CRT Trend Continuation. First, we'll be talking about what's a CRT, CRT Trend Continuation, entry technique, and what to focus on as a trader to look for profitability. Before I start, make sure to like and subscribe to the YouTube channel. First, we'll be talking about what's a CRT. CRT, the full meaning of CRT is candle raise theory. I did a full video on CRT, which the link will be popping up. You can click to it and watch and understand what is a CRT. The candle range theory is the act of understanding that every candle is a price range, where there is an open price, low, high, and the closing price in every candle. If you can look at the previous candle and see a specific patterns in those previous candle, you can anticipate the next candle. So that is a simple definition of CRT. But you can check on the YouTube channel to see a full video where I did on CRT. Now, CRT trend continuation. So in a CRT trend continuation, first we talk about anticipating higher prices or an up close candle. When the previous candle closed above the recent candle, a recent up close candle. When the previous candle closed above the recent up close candle, you can anticipate the next candle to be an up close candle because it is indicating a trend continuation. If we were to look it on a lower time frame, it would be an uptrend. So it's an easy way to anticipate the next candle to be an up close candle if the recent candle closed above the previous candle. So the CRT trend continuation is mostly going to be formed by 3 candles, but in this example you can see multiple candles. The first candle is going to be the candle in which we'll be measuring the range to see the second candle close above the candle's high. You can see this candle closing above the high, closing above this high. Now you are anticipating this next candle to be an up close candle. The same thing goes to anticipating lower prices or anticipating a close below the opening price. A close below the opening price, you have to see the second candle close below the first candle. So here's the first candle. The second candle needs to close below the first candle. Then you can anticipate the next candle to be a down close candle, which is going to be the third candle. Now, in this Hero US dollar 4-hour chart, you can look at this price action. You can see this, the first candle created a high, the next candle closed above the high. Anticipating this next candle to be an up close candle, which you already see by power of hindsight, you can see the price closing above the high. You're anticipating higher prices on the third candle. Now, when you identify a bias like this, you have to apply the PDRA for more confirmation, which I will advise. You apply the PDRA for more confirmation, but you can still trade it like this. You can trade it based on the previous candle or the previous price action. So after anticipating the next draw on liquidity or anticipating what the next candle is going to be, you need to learn how to take advantage of that candle. This is a 4-hour candle on Hero USD. Now I'll be zooming down to this candle to show you how to take advantage of this candle. After anticipating that you're expecting an up close candle, you'll be looking for a power of 3. You'll be anticipating price to form a power of 3. From the opening price, you want to see price go for a sell side liquidity, either to fill an imbalance, which is a fair value gap, or run out a sell side liquidity. You just want to see price go into a discount. Price going into a discount is going to be the manipulation phase, because in the power of 3, it's going to be the accumulation, the manipulation, and the distribution. So from the opening price, you want to see price go into a discount, going into either an imbalance or a sell side liquidity before the distribution. You're looking for your entry as soon as price trades lower, going for the sell side or to an imbalance. During the manipulation phase, that is when you take your entry, then you hold price or price to move to the distribution phase to lead to your target. Here is the 5 minutes in that 4-hour candle I pointed out. So on the 5 minutes, you can see the opening price. The blue line is indicating the opening price. Price open, traded lower into the fair value gap. You can see the fair value gap. This would have been your first entry. You are taking an entry at the fair value gap, placing your stop loss at this low, at this swing low. You're aiming for higher prices. You can use the 4-hour swing level as your next draw on liquidity to aim for higher prices, or you can use a fixed risk to reward ratio. Price traded higher, you are anticipating higher prices. If you're seeing the 5 minutes forming more fair value gap within the price range, you can still take on multiple entries. You can see another entry after price did what? After price manipulated, went on a discount into a discount imbalance or a discount fair value gap. Price traded higher, retrace to this fair value gap as your second entry. So there's more to this strategy, and if you want to understand more on this strategy, it's being taught in the FOREX Trading Empire community. So the link has been linked in the description below. Make sure to join the FOREX Trading Empire community. You chat up the admin to get you started, to set up a private mentor to teach you everything you need to know, where you're going to be forming a trading model. This is one of the trading model in the community. You'll be forming a trading model which is going to fix your own personal time. It is going to be on the Asian section, the London section, and the New York section. So this would have been your second entry, anticipating higher prices. You can see there are multiple areas where you could have taken advantage of this price swing. But it's after you already anticipated the next candle to be an up close candle, closing above the opening price. Now, let's talk about a bearish scenario where you are anticipating a down close candle. This down close candle closed below the first candle, taking out the candle's low, closed below the candle's low. You are going to be anticipating the next candle to be a down close candle. So if you are to apply the PDRA, you'll be anticipating the next down close candle to lead to the next sell side liquidity. So anticipating a down close candle, we will applying the power of 3, where you are expecting price to go for higher prices to run out a premium price before trading down. So a power of 3 in a bearish condition, you are expecting an accumulation, a manipulation, and a distribution. So at the opening price, you're anticipating price to trade either to a premium imbalance or a premium fair value gap to take out a buy side liquidity. Then you're looking for your entry as soon as price trade either into the imbalance or take out a buy side liquidity from the opening price. So you're looking for a premium price, you're looking to sell at a premium. Then you hold the price, trade to a discount, going for either the higher time frame liquidity or you aim for a fixed risk to reward ratio. Now here is the 4-hour candle I pointed out, expecting lower prices. Here's the opening price, indicating the opening price. Price traded higher, took out this high, traded into the fair value gap. You can see how price stayed not closing above the fair value gap. Price were expecting the fair value gap. This is precision, having a precise way of entering. I've explained this is one of the models. We have many models which will fit your style in the FOREX Trading Empire community. Anticipating lower prices. As soon as price trades to this fair value gap, should have been your entry. You are entering, placing your stop loss at this high, holding for price to trade to a distribution. Price traded lower, give out another fair value gap, breakers candle at the same level of the fair value gap. So you'll be setting your limit order or taking an entry, stop loss at this high above this fair value gap. This would have been your second entry. Price traded lower, did a retracement again to this fair value gap. Your stop loss will be at this high. So managing the trade is mostly going to be on personal preference, right? It's going to be on personal preference, but your stop loss will be at this high. Then you hold price to a higher time frame target, which I pointed out. It was a 4-hour sell side liquidity, which was at this low. So understanding what to focus on is one of the major parts. For you to become profitable in the market, you just need to have a trading model. I've talked about this in many of my videos where I've gave out many trading models. You just need to have a trading model in which you can repeat multiple times and is profitable. You understand the strategy, you have the experience enough by back testing, forward testing, and practicing. That's one of the major things to focus on. You need to have a model where you can repeat multiple times so that you can back test, forward test, and practice with it. Having the advantage to trade it on a live chart. You just need to have a trading model where you need to be consistent with. So in the FOREX Trading Empire community, that is one of our main goals, where we do a one-on-one class we have private classes with students, tell them to stick to a trading model where we help them develop a trading model where they can easily stick to. Then we keep a full tab on them to make sure that they are sticking to that trading model where they're keeping a clear journal. Either they're using a video journal or they're doing a documentary journal. So that to see if they are aligning themselves or they are staying disciplined to that trading model. So what you need to focus on is to have a model where you can easily repeat. And this might be your model because this model is very easy. It's just using the 4-hour time frame and the 5-minute time frame for understanding the CRT. So you go to the YouTube channel to watch more on what is a CRT. There's a video titled What is a CRT. You watch more on what is a CRT to understand more on CRT. Then you go to the 4-hour, apply the PDRA to anticipate the next candle. You're anticipating the next 4-hour candle. Now, to base this on a section, it's very easy. You just need to know the section you're trading on. But if you want to have someone to tour you through it, to show you on which section you should focus on depending on your time, then you know that the FOREX Trading Empire is the best place for that. So that's all for this video. Make sure to like and subscribe to the YouTube channel.